Good afternoon, this is Adam Tuiaana with RJO Futures in Chicago. Today is Wednesday, January 9th, 2013. This is your quick market wrap-up for soft commodities. Starting out with cocoa, which last traded at $22.33 per metric ton, puts it up $18 on the day. This is a market that continues its sell-off since December 3rd, so it's actually been very volatile, very violent to the downside. So I'm expecting a little bit more of that to take place. Yesterday actually forms an outside day down, which is an engulfing pattern technically. So I'd expect it to continue that way. The Ivory Coast has also reported that their port arrivals were much higher than last year, so that's also bearish. Moving on to coffee, which last traded at $148.50, which is $1.48.50 per bag, which puts it up 35 ticks on the day. Fundamentals are pretty mixed, mostly bearish on coffee. It took a bounce up last week. I think that it might be forming some type of basing reversal pattern to the upside, but it's kind of hard at this point to really tell. So this bounce last week reached up to 151.95, came into some good resistance at that area. So that price action that took place with that basing reversal on that, meeting the resistance level at 151.95, is also producing an outside week down engulfing pattern. So that actually not outside week up, so that actually makes it a pretty bullish market at this point. I think that there's going to be some resistance at 155, but overall on coffee for the time being, I'm neutral unless we can get past that 155 area, which is a little ways from now. Moving on to cotton, it closed at 74.88. Likely this is in a pretty decent sized correction, probably will be for a little while. However, I am bullish. Another outside week up, which is bullish technically. Traders likely will see or are expecting to see some slowdown, big slowdown in demand. There's a pretty decent size USDA report, supply and demand report, due out on Friday. I think that'll move the markets, and I think that'll move them down with further corrective action. Same time, it looks like we're expecting US and China to still scale back on their planted area, which can also add some support to the market. Overall, I think the correction continues with cotton for a while, but I am continued long-term bullish on cotton. Finally, sugar last traded at 18.80, which puts it up 13 ticks on the day. This has been a steady downward market. I think that the fundamentals are pretty bearish. No real technical action to support, to lend some support to the sugar market. It really needs some good demand fundamentals to help support it. There is a surplus of global production that's been reported, 6 to 7 million tons for 2012-13 season. Big production numbers out of Thailand and India, and a big expected Brazil harvest, also very bearish. So overall, I'm still going to hang neutral on sugar. I'd need to see a break somewhere above the 20-cent level to get excited about doing anything about with sugar that's bullish. If you do have any questions on the soft commodities markets, please, you can contact me directly at area code 312-373-5392. And remember, these markets are risky. There's risk associated with trading futures, options on futures, and futures trading may not be suitable for all investors. Thank you and have a great day.